All right. Thank you. Thank you. So we'll dive in. Hopefully, sorry for the head. I don't love this headset, but I forgot my AirPods. So it is what it is. I want to make sure the sound is crystal clear. Um, so we'll dive in. I don't know how many of you have used rural development before. It's a very particular product. It's not a one size fits all for sure. So we'll go through kind of what it is and some of the ramifications or limitations or different requirements that have to be met in order to use the program. So we'll hop right in to it here if I can get my screen to work there. All right, so rural development, just as a heads up. So this program, what it offers, so the guaranteed portion, we'll kind of go into what the other portion is, but the guaranteed portion offers an individual, a buyer, to have 100% financing. Pretty unique in that outside of some like one-offs that do offer some sort of, whether it be second mortgages or different things like that to get to someone making it to 100%. VA is the only other one, widely used that offers that same type of 100% financing. It does have income limits and it does have property location limits, both of which apply and both of which need to be considered prior to someone, running down that road there. So that's a guaranteed program. And I'll kind of go into it a little bit more as we're going through some other stuff. And then the other piece of it that you may have come across or may have seen as you've maybe researched rural development is the direct portion. So the direct portion of rural development is handled directly with rural development. So it's not something that myself or Monica or lenders in general help with. It goes directly with them, and it's for those individuals that have really low income that is even below what the regular program, the guaranteed program, is going for. So those ones get directly pushed over and assisted through rural development directly. All right. So I wanted to have everyone, if you have your phone, you can just scan the QR code here. But I'm going to go in because I want this to be practical, something that you guys can utilize to see. Let's say you have a listing on a home and you want to know if that home is located in an area that is eligible for rural development. And I'll handle both at one time. So there's going to be the income side of things to see if someone is within the income limits, and then there's the property eligibility. So we're going to scan this QR code. I'm going to show it on my screen. I'll have to look over to the left where it's going to pop up here, so I can show you guys, and we'll put it up on the screen. But all right. So if you scan the QR code, you end up seeing what is on the screen now. And what you want to do is you'll click accept. I'm sure it's got something signing your life away. You just say accept. And then you'll notice that you're on the property eligibility tab. And so if you wanted to see if it was a specific address that you had, that's great. If it is like an area, you can kind of get to the general understanding of what's allowed. So if I went to Wasilla, Alaska, I just hit go. Let me see if I can make this. Oops. We'll zoom out a little bit. Don't ask me why they choose to use similar colors for eligible and ineligible. It boggles my mind, but this lighter colored thing is eligible. This darker color one, darker yellowish thing, is ineligible. So you'll see all the areas around here, and if, I'll scroll out a little bit further for those that are interested in general area here in Alaska. But you'll notice down here, so down all that, you kind of have some areas there: Anchorage, Eagle River, no goes. But then you have Wasilla, Big Lake, Willow. So yeah, you wanna check for the location first. So see, is the property that I'm listing, is it even in an area that qualifies? Or if someone's looking to buy, if they're looking in an area, if they're looking in Anchorage, then we're not even, myself and Monica, we're not even going over the rural development program with them because it's not going to apply. It's not something they can use. So if I go back up to the top, and that's just one area, if you have a specific address or if you want to check multiple areas, you can certainly do so. If I go over a couple tabs, you'll see income eligibility. What we're going to do is we're going to pick a state. Again, I'll just pick Alaska. You can pick any state, doesn't really matter. Other than the state will change. So the state, I say it doesn't really matter. It does matter. What state you choose and what county and everything have different income limits. You'd obviously pick the one that's located where you're at. I don't want that one. Income limits, I don't want income eligibility. That's if you're going to go through someone's actual income to see if it's underneath the income limit. We don't want to do that right now. So you can choose the state, we'll choose Alaska. And what you'll notice is that, let's just choose Anchorage, but you can see it has Anchorage, Matsu, Fairbanks, and each one of them has different income categories. And they're broken out, areas with a road system, areas without a road system. Majority of the things I've ever seen is with a road system, but I'm sure if that ever comes into play, you can see what it would look like without a road system. But all of these would qualify, but they have to be at or below these different marks. So if someone has 4 people in their family and they're below 133,950, they could potentially go rural development. Now, here's the thing with rural development on the income side of things. Anyone 18 or older that would be living in that home, we would have to consider their income, whether or not they are on the loan. So if you have you have a mother-in-law or you have a grandma that's staying there and they are also working, that income, regardless of being on the loan, would have to be considered. If you have an 18-year-old kid, they're doing their little side gig or whatever, a part-time job, whatever, that would also be considered and measured up against this income limit, and it has to be below this amount for them to qualify. So that is a unique thing in that it's not just those people that are on the mortgage application, and they want to know all income sources. So when we're looking at bank statements, you're looking for anything that could be looked upon as income, we're diving into. To determine, is this income? What is this? Is it going to have to be met or pushed forward to see if it exceeds that income limit? So they're super strict about their income, how they're going to come about their income, how it's going to flow through. So let me get back open the slides here. So if you didn't have a chance, go ahead, scan that QR code. You'll see the link there. We can also send the link out with the recording that we send out as well. So you guys have that. You can look up whenever you want. So I'm going to skip this next tab because it's just going over the other part of it. Same QR code, so nothing unique there. All right, so what is considered eligible properties? So you have single family homes, you have townhomes, condos. They want to make sure obviously they're on the FHA approved list. I know it's not FHA, but these things, I mean, a lot of times they piggyback off each other with what's approved and what's not approved. They do some manufactured homes. 2 to 4 residents are strictly prohibited. So rural development is not something you do any type of investment properties. They're not interested in anything like that. They're strictly trying to help someone get into a primary residence. And they're very, very particular about that. And they're very, very cognizant of trying to make that happen. And so they're not interested in any unique property, like if it gets super unique, or they want it to be livable right away, 100% ready to go. Because a lot of times when people are considering this type of product, they may not have a whole flux of cash available. And as a matter of fact, if they do have a whole bunch of cash available that they could put down, they might not even be able to go rural development because they might try and push them to conventional financing instead. So just keep that in mind. Like they're not looking for a fixer-upper. This is not a fixer-upper type program whatsoever. It's really just trying to benefit those that need housing. All right. Loan parameters. So no loan limit, as we mentioned, but the income limits kind of govern quite a bit of stuff here. There's the household income limit. It's not just who's on the loan. There's the upfront guarantee. So think of this as like an upfront, on FHA, they have the upfront mortgage insurance premium. Very similar. It's an upfront payment that gets made that they can finance into the loan amount. It's 1%. So that can be financed. And then they have the monthly mortgage insurance that's 0.35%. So they do have mortgage insurance, although to be fair, that's on the cheaper end. Even compared to FHA, it's not as expensive as FHA's mortgage insurance. We hop into an example here. If you have a family of 4, you have 2 adults and 2 children, with a maximum household income limit for the area of $133,950. You have total repayment income that they make of $90,000, and then you have monthly debt payments that they have of about $700. 90,000 is about $7,500 a month. Rural development is super, super picky with their debt to income ratios as well. So you'll see two ratios listed here. You see 29% and you see 41%. 29% is what's considered the front end or the housing ratio. And 41% is the total debt ratio. Those don't move around very much. They are hard pressed. You can kind of sometimes like a little bit, but just they're pretty much there. So if those ratios have to hold true in this scenario, if you had to keep it at or below 29% on the housing ratio, that means the max housing payment could be $2,175 and the total debt payment could be a maximum of $3,075. So if we were to translate that a little bit into what that mortgage might look like, obviously keep in mind, this is not an interest rate for today. It's impossible to do that. We'd have to do it literally like the second of. So these are just interest rates in general. So if we use 5.625% as an interest rate with a $285,000 mortgage, you'd end up with a total monthly payment estimate of $2,168.50. And then if you add it in, so that is below, you'll notice that's below the $2,175, so that's good. And then if you add in the $700 a month of other debt that they have, it's $2,868, which is below that $3,075. So both of those are good, meaning that you're not being capped on both of those. You could still consider to see if you can get approval or not through rural development. And they have their own underwriting system, just very similar to like Fannie and Freddie's or what we use for FHA. It's a different platform, but they have their own that they analyze the application and they kind of come up with their own analysis and either approve or deny moving forward with applications accordingly. All right, so very similar to FHA in that they'll allow a max seller contribution of 6%. Not too much unique there. So this is a quick one. And so if you guys have any questions, let me know. I guess there's not too much else to say about the program. We don't expect, obviously, you guys to be experts in it, but just to give a general understanding, and the key takeaways that I would have if I were in your shoes were that QR code, which we'll send the link in the email as well, that you could kind of take a look. Maybe it's helpful for your listing to see like, hey, could we throw this out there? Or maybe it's just helpful if you have a borrower that's looking and maybe you just want to see like, hey, maybe this is something that I wonder if they chatted with their loan officer about this option, or they were looking in Anchorage and now they're looking in an area that is acceptable. Like, hey, by the way, they're looking in this new area. Like maybe take a look at this. So all those things can be helpful from your perspective, but it is something that is they're very particular. They're very particular. So we do have to check a lot of boxes and go through the work there on the pre-approval side to help them get qualified. So are there any questions there, Monica? You're muted. Ooh, technology error. Or user.
My bad. We don't have any questions. I think that you have explained it very plainly, so good job. Great job.
Or
It's an
very
amazing
confusingly,
program.
right? They're like, I
No,
don't even know
no.
where to begin. Oh, that's great.
No, rural development is an amazing option. I have a couple clients right now. One just put in an offer this weekend. So fingers crossed that the offer is accepted because they're very well qualified buyers. And this is an awesome program to be able to help people get into homes. It's a home ownership incentive program.
Awesome, awesome. Well, we'll end it there then. We'll get a recording out to you guys. We'll include the link to that webpage where you can kind of take a look at stuff. And if, as always, if you guys have any questions, more than happy to answer those as they come through.
Awesome. Bye,
Okay.
everyone.